Welcome back. The U.S. auto sector is bracing for a strike from the United Auto Workers that is set to target selected plants at Ford, General Motors, and Stellantis. The union hasn't made a decision yet on whether to enact those strikes, but its current labor contract expires tonight, and a deal has not yet been reached. Our next guest believes that near-term investors might have a difficult time buying auto stocks during this environment. Let's bring in Tom Narayan. He's global auto analyst at RBC Capital Markets. He's joining us from New York. Tom, thanks a lot for joining us. How likely is a strike here? The two sides appear to be fairly far apart, and the union's demands for wage increases seem very steep.
Yes, I think it's very likely that we are going to have a strike, a work stoppage. But I do think that was largely expected, as you said, given the large chasm between where the UAW was initially and the OEMs. Both have since kind of narrowed down a little bit towards each other, but there is still a wide gap. So I do think that the strike will likely happen.
Do you see it as being a prolonged strike?
I think there's a better chance that it is longer as opposed to being cut short. I would caveat that by saying that, 2024 is an election year, so there is enough momentum from the administration to not have it drag on and on. But if there's indication of 2019, what happened, that was a 6-week strike targeted at one OEM. This is targeted at 3 OEMs. There's enough indication to suggest it could be as much as it was in 2019, or maybe more.
And you've written an interesting note earlier in the summer, about a month ago, three or 4 weeks ago, on the 2019 strike and the effect it had on General Motors in particular. What effect did it have?
Yeah, so it had a $3.6 billion hit to their operating profit. That was a one-time hit in the quarter, which is sizable. But very quickly, numbers snapped back, production came right back. But then, of course, you had the pandemic, and they were able to raise pricing. So everything seemed to be kind of one and done. So the lesson that we learned was that, these are largely one-time events. Work stoppage has an impact, no doubt about it, a financial impact. But there's a quick snapback, and auto production comes back for these OEMs.
What are the implications for big auto parts makers like Magna International, which I believe is a company that you cover?
Yeah. We just had them at our conference 2 days ago, actually. So I think for the suppliers, the situation is a little bit different than for the OEMs. Remember, the OEMs benefit from low production in some cases because they're able to keep pricing elevated. Inventories have been rising since the pandemic and all the supply shocks, and that has created a concern that pricing would come down for the OEMs. But now, if there's a work stoppage, they can, in an ironic way, keep pricing up, which helps them. For the suppliers, it's a different story altogether, right? Because lower production is they're all volume businesses. So lower production is not good. If it's a protracted strike, that won't be good. The other thing I would say about the suppliers is they can't just keep building components and build up in inventories during the work stoppage until the OEMs come back, because there's nowhere to really store it. So I do think it's kind of the tale of two sides. I think it could be beneficial in some ways to the OEMs, but I think it is worse off for the suppliers.
Is there any takeaway here for the Canadian auto assembly facilities operated by the big Detroit 3 during a protracted strike? Would things change at all here in Canada? Obviously, Canada unaffected by the labor situation because there's a different union representing the workers.
It's a good question. It really is tough to tell. The uncertainty of when they're going to come back online would make it difficult to just shift production to another facility in the hopes that it ends quickly. So I'm not really sure if it would be a benefit necessarily. But yeah, as you pointed out, it certainly wouldn't be as problematic as it would be for the U.S. production facilities.
Why don't we finish with your view on these stocks as they ramp up their capabilities to compete in the electric vehicle market? How strong competitors will Ford and GM be in that space, and what's your view on the stocks?
Yeah, so I am a global autos analyst. I do also cover the European names. And I would say that because of the IRA, it is a real advantage for the Americans. The Europeans can't do an IRA. really, because there's some political reasons. China is a huge export market for the German OEMs. So I really do think the U.S. OEMs are better positioned. Specifically, I highlight GM and Tesla. They're very ahead on electric vehicles, and they are producing their own batteries, which will be a big beneficiary of the IRA. So I would highlight, GM and Tesla in North America.
Okay, the IRA.